But I would say, I think when you take that capital, and I think most artists don't truly realize the cost of that capital, right? Because, if you're taking 300K, but the servicing cost on that is 80/20, where it's 80% the label and 20%, the artist in the traditional label deal, for example, it's like you essentially have to recoup 4 or 5x of that amount before you even see a single dollar. When you look at a lot of successful artists, part of the reason why they take that label deal or that secondary advance is that they have to pay off some of their taxes, or they have some liabilities, or they're refinancing their home and they need to put down more money for equity on a property, right? So I would say that, I think a lot of common mistakes is taking that advance money, not tax planning from day one.
Mm.
And then when it comes to year end, it's like, surprise, surprise, the IRS this year wants to collect. And I think what a business manager is supposed to do is just sort of, set that expectation up front that, hey, like, if you're making money, you're paying taxes. A lot of people think that's a bad problem. And also no one wants to pay taxes, but it just shows the government that you're actually making money, right?
Mm-hmm.
So it's like a weird thing where it's like paying taxes just is a catalyst that you're making some money.
Welcome to the Manager's Playbook, featuring Dan Gonzalez. Dan Gonzalez, what's going on, man?
What's going on, brother? How are you?
I'm doing good, bro. I'm doing good. We got a lot to talk about here.
Yeah, both good to be in Toronto doing this,
Yes, absolutely. Listen, for those who don't know, you're a business manager in the music business, 29 years of age, up and coming, crushing it. I want to get right to it, man. What does a business manager in the music business actually do?
Yeah, I think, the term business manager itself has evolved so much, but historically it's kind of been the finance function of the artists, producers, songwriters, executives, back office. Historically, it started off as, taxes, bill payment, year-end taxes. But I think the role itself has evolved so much with, music becoming an institutional asset class.
Yeah. And so, on that front, so talk to me a little bit more of how much it's evolved, because you said it's ledgers and taxes, and now it's gone into this like place where we are talking as an asset class.
Mm-hmm.
There is capital coming in from a lot of places, because it's not just based off of retail transactions.
Well, I would say this, like, music has historically been very centralized.
Yeah.
Now we're at a point where it's so decentralized.
Yeah.
Right? Before it was labels paying out artists. Now you have artists distributing themselves, paying out producers and songwriters, right?
Right.
So the layers of complexity have evolved significantly, because if you look like 30, 40 years ago, you had touring, that was sort of the settlements. You had the labels paying out artists, producers. But you fast forward 30, 40 years where artists are, streaming independently. So now they're paying out people.
Mm-hmm.
So you need to invest in that sort of back office functionality, because it's become so much more than just paying out people and just doing taxes.
Okay, so what's the difference between a business manager and an artist manager?
I would say artists will primarily focus on the creative aspect of the artist's trajectory, right?
Mm-hmm.
And I would say that the business manager is kind of that sort of intermediary function, because the artist and the artist manager and the artist have a unique relationship, because you want to have that intermediary that controls finances to make sure that there's someone independent there verifying funds and making sure payouts are done correctly.
Mm-hmm, mm-hmm. And so now when you talk about the back office piece,
Mm-hmm.
let's go into that a little bit deeper. What does that actually mean?
All right, folks. I hope you're enjoying this convo. There is a ton of value that you can extract from it. And speaking of which, if you're an artist or manager watching this and you want to get more in-depth strategies regarding your career, then my one-on-one consultations could be for you. These are fully personalized, just you and me tackling whatever you need in your career. Now, if you're not familiar with me, if you don't know, I have over 16 years of experience working with artists like Jesse Reyes and Eminem, to managers like Troy Carter and Tyler Henry, to working with brands like Nike or the Toronto Raptors. I have deep knowledge in many areas of the music business that can help you map out your next moves. Whether that's helping with your personal brand or creating a marketing plan or building out your content strategies that actually provides results, or simply navigating the music industry to whatever is most relevant to where you're at, I want to help. You can now book a one-on-one consultation session for a fee with me through my Calendly. You can find the link in the description below. Now let's get back to the pod.
So I say back office is essentially saying like what is your finance infrastructure, right? In this business, as you know, it's notorious, even when you're dealing with the big labels, it's notoriously hard to even like onboard to a UMG portal or a Warner portal. It's kind of like legalese.
Uniport?
Yeah, it's like legalese for, artist managers. An artist manager's worst nightmare. It's an artist's worst nightmare.
Yeah.
I think, the business manager is that person that just has, the patience and just the true understanding to make sure that, your W-8s are updated correctly, your W-9s are done correctly, if depending on where your jurisdiction is, and just doing all that sort of tedious work on the back end to make sure that money is flowing, legally and also in a cohesive way.
But are you doing that just like, does a business manager come with a team? Is it just one person? How are you able to do that if you have a bunch of different clients? Because, you have a few clients, one of them being myself.
Yeah, and right? Exactly. No, I think, historically you've had these mass market shops that essentially cater towards, a lot of, high profile clientele, but there is kind of the emergence of like, I would say like the independent business manager where I've gone more boutique. Like my strategy isn't to have 20, 30 clients. I want to pick 5, 10 clients that I want to grow with and actually, measure the success of our relationship over the course of 5, 10 years.
Mm-hmm.
Whereas I think even in a traditional business management shop, it's more corporate-y and you don't have that necessarily same one-on-one experience and sort of tailored experience. So, there's two models to it. I think the model that I'm pursuing is more a la carte, where it's more a service-based approach. And I kind of look at each independent client needs and be like, engage with it, because, you might start off with a business manager just to pay bills, but, 5 years down the line, it's a lot more cohesive. You're doing ventures, you're raising capital, you're assigning assets over to the right entities. You're managing cross-border tax if you're a Canadian artist that, is from Canada, but also performs in the US, right? So it's a lot more cohesive as you develop that relationship. But starting, it's like just, traditional paying taxes, making sure you pay vendors and bookkeeping.
When you say assign assets to the right entities, what does that mean?
So I would say like, a perfect example is like, an artist starts off with, himself. He starts earning income by himself. He becomes more mature. He has some money flowing. Typically a business manager is like, hey, it would be good to sort of set up a company, an LLC, a corporation. So now your music is, being earned through that loan out company or LLC. But then you also have brand deals. You also have publishing. You also have merch. And now you're pooling all of these revenue sources into one company. But as you develop and you get more mature, there's a lot of risk associated with meshing all those assets or sort of revenue streams into one company. So then you start setting up additional companies.
What are those risks?
So for example, a risk would be like, let's say you wanted to do a label venture.
Yeah.
You wouldn't want your merch business or you wouldn't want your brand business or publishing business to be commingled with that asset. You would essentially want to set up an independent label business just to make sure that all the money goes to there and all label/partner businesses flow through that specific entity.
All right, listen up, guys. Gonna have to take a quick break from the podcast because I want to talk to you about your music rollouts. Listen, most artists fail because they don't have a plan for their music. There's no strategy, no timeline, no idea what to do after the song drops. That's where Venice Music comes in. Venice is built to help independent artists release music the right way with guidance at every step. They create personalized rollout strategies based on the artist's goals, timeline, and release. They handle global distribution to every single major platform, and they offer the best customer support in the game. Now, this is real people you can actually talk to when you need help. It's not just about getting your music out. It's never been about just getting your music out. It's about doing it with intention, backed by a strategy that makes every move count. So if you or your artist is gearing up to release, don't just upload and hope. You got to go to Venice Music and get your free personalized rollout strategy. We'll also have a link in the description below for you to check it out. Now let's get back to the pod.
So when you're saying that and you're separating these entities, is it all going under one holdings? How does somebody actually do that?
I think in a super mature, super high level is like you have a trust, which owns your holdco.
What's a trust?
So trust is a vehicle that, a lot of, successful artists, actors, it's kind of like the final form of structure where they essentially have a trust which has a beneficiary to essentially look over the client's assets as a whole.
Mm-hmm.
And it flows there as well because there's also a lot of tax benefits as well. So
Mm-hmm. And okay, sorry. So you're saying, so if you have a mature company, you set up a trust and then?
you set up a holding co.
Yeah.
So the holding co is like, you look at artist hold co, and that's kind of where all the revenue flows up to that company.
Okay.
And then within your hold co, which is called like your parent company, like a traditional setting, you'd have, hold co, you would have operating company for the label.
Yeah.
So that operating company just earns all your label income. And then you would have an operating company for your publishing if you wanted to even further, separate that asset. So you would have a publishing co. Then you would have a merch division, right?
Mhm.
Or you would have a touring company. And essentially you set up all of these different operating companies to just limit exposure because, for example, the touring business in itself is a very high risk business. Things happen, insurance, claims, et cetera. So you want to make sure you limit that liability, for example.
So let's take the Ato Faint as an example, as a real life example of what we've been doing. It's obviously not matured at a massive level, but what have we been doing here? Just to give an example. And I'm okay to put my business out there.
Yeah, no.
Not revenues and numbers over here.
Yeah, no, I think when I look at your business and what we're working on right now too, I think a big part of it is just setting up the lay of the land for you to succeed in 5 years, right?
Mm-hmm.
Ato Faint would essentially be your parent company, right? It's currently the company that is contracted to service all your revenues, but your revenue streams have become so diversified. You do consulting, you do management, sponsorship,
revenue,
and even this podcast, right? Yeah. So you necessarily, when you're looking to work with, a future partner, for example, right? If you're working on a podcast deal, you wouldn't want that deal to be done with the parent company, of which also holds the assets of all of your other revenue streams, right? You would want to silo that. Mm-hmm. So that's what we're working on right now, where we're creating another company which would essentially own the IP of, your podcast.
And I asked that because, in this business, a lot of people don't really know what a business manager does. And what I've been looking for is somebody like you to actually help me with the strategy. And not me go and ask the questions, but somebody like you to actually be like, yo, have you been thinking about things this way and that way? And intuitively, I've learned, I get it and I understand it, and I've had to learn it over the years, right? But to action on that and execute on that, I think a lot of people think that an accountant is supposed to do that. Or sometimes a lot of people in this music business just believe that the business manager is the accountant.
Yeah.
Tell me the difference between that, because there's a lot of that in this business and people seem to get fucked over, for lack of a better word, over and over in this area.
Yeah, I would say a lot of accountants are business managers, but a business manager is not necessarily an accountant.
Okay.
So, there's a lot of CPAs who become business managers. I mean, I have an accounting degree. I don't have my CPA, but, I'm an accountant by sort of trade, what I studied at school. But I think there's this expectation that, when you work with someone that's just doing accounting functionality, that you also expect them to do the strategy work. Like accounting is more of a compliance function, right? Compliance and tax optimization.
Yeah.
I think the business manager or an effective business manager essentially uses that information to make strategic decisions and strategy. So it's more forward looking.
Yeah. Okay. That's pretty simplified. Can you give me a bit more of a general kind of if an artist is, well, better yet, what's his question? When does an artist seek out an accountant or a business manager?
Yeah, I think the step number one is that obviously when you're, let's take the artist who gets their label advance, right? 100K, 200K, 300K, that ultimately has to be reported to the IRS if you're in the US, CRA if you're in Canada, right? Now, you realize that, I think the first trigger for an artist is that tax bill, that first tax bill. They go to their accountant, they get that 100, 200K advance, and then they realize they have a tax liability owing. And then that kind of triggers, hey, you should open up, an LLC or a corporate structure to sort of flow through that, So that's kind of like the evolution or the trigger for the artist to be like, well, I think I need some sort of back office functionality.
If you don't mind, I stop you there. So what that means is, say you get $1 million advance, right? Or just even smaller. Say you get the $200,000 advance, right? You should know that half of that advance, you pay the taxes.
Yeah, it's interesting because it's a couple of things, right? Canada is a high taxed, sort of country, but so is California and New York.
Yeah,
right?
yeah.
So, there's even a broader thing, even within the US, tax is so complicated because it's based off where your residency is, right? So a lot of people have moved to Florida, for example, to sort of take advantage of the no state tax, for example.
Yeah, yeah.
Right?
Texas
So
has that too, right?
Texas has no state tax as well, right? And it's becoming a real phenomenon. Like all the big hedge funds are moving down to, Florida, Miami specifically, and essentially building around that sort of tax benefit, right? But I think, just having the network or the accountant to even support you even prior to going to those label deals, it's important because you could set up a structure before you take that advance and structure in a way that's most tax efficient.
Yeah. Okay, so if you're doing a $200,000 advance and you got yourself set up in Florida, how much are you paying in taxes on that? How does that work?
If you just claim that income as a whole, you pay, probably paying in the higher tax bracket, right? Which will kind of be anywhere from 35 to even 50%, depending on where your jurisdiction is. Because in Canada, like anything over 250, you're being taxed at like 53%.
Yeah.
Right. So
on your personal,
right?
Yeah.
But I think where a business manager would come in, it's like, hey, yes, you're getting this 200K advance, but guess what? You have a bunch of these expenses. You have travel, you have T&E, you have flights, you have wardrobe. All of these, expenses are, you can write it off, right? So essentially reduces your taxable income. So if you were to claim the whole 200K personally, you're paying at the highest tax brackets. But if you put it to the right structure, you're able to write off costs before you even claim that income. And I think that's like, a cool fun fact that, most artists should know.
Right. So then does it make sense if a rapper wants to go and buy a chain for $40,000 or $50,000 off of their advance, that's a good expense because
then
write that off?
That's where the IRS gets, even more complicated, because as long as there's a professional and business need, you can make that argument, right? But at the same time, that's where also a specialized accounting comes into play, because a business manager is kind of like the project manager connecting the dots. It's like, okay, if you're in the podcast business and, your name and likeness is important, wardrobe is important, right?
Yeah.
If I'm a business manager, I'm behind closed doors, me buying a Rolex, and I can't write that off because it's not for a business need.
Right. But so now, would you recommend that though? If you get a $200,000 advance for an artist to go and buy a nice Rolex or a nice chain, like what are you recommending? Because to me, that doesn't make any sense. I get it that you have to you have to keep up appearances, but
yeah, and there's other ways to do it. You can use it in videos. You can rent it out. There's so many. It becomes like your outfits and stuff has been so commoditized that it's like there's literally services that provide the Rolexes, the cash, the chain.
Right.
When people do like the Met Gala, they literally just rent it from a jeweler, right?
Yeah.
But I would say, I think when you take that capital, and I think most artists don't truly realize the cost of that capital, right? Because, if you're taking 200-300K, but the servicing cost on that is 80-20, where it's 80% the label and 20%, the artist in the traditional label deal, for example, it's like you essentially have to recoup 4 or 5x of that amount before you even see a single dollar, right?
Break that down, simplify that so people can understand what that means, because it's come up in the podcast a couple of times, but I want to make sure that it's coming from a professional like yourself.
So, and let's use $100,000, right? as a nominal number, right? An artist signs for 100K for, let's say, 4 projects. Each one has an option. So 100K, 150K, 200K, 250K, because they're stepped up, if you get to that level. If you take that 100K, essentially the label will essentially take an 80% profit share or 80% participation on that income. But before you even see your 20%, the label has to recoup their amount. So essentially, if you're only recouping on a fraction of your rate, which is 20%, that 80% you don't ever see, and it goes directly to the label. So you're recouping off a 20% nominal value as opposed to the 80%.
So that means, to your point, if you get $100,000 advance, if you're recouping off of 20, that means you got to recoup $500,000.
Yeah, essentially $500,000. Yeah.
Why?
I think I think a lot of people are anti-label, but if you look at it on the flip side, it's no different.
Yeah, explain that.
Than like the way venture capitalists work, right? It's like you're investing in you're taking risks, right? So it's the highest risk ever, because you could cut someone 100K and they can never write a record ever again, and then that's just a write-off for the label, right? So I'm not anti-label, by any means. I'm just saying that, like, I also get the perspective of the label underwriting those deals, because they're underwriting $1 million of deal flow on any given quarter, and they have to make their ROI as well.
No, for sure, I get the ROI and underwriting the risk, but why are you underwriting the risk at a 5 times multiple instead of just recouping off of the actual 100,000?
Yeah, and I think that's where the distribution model has come through, right? Where it's like, it's traditional label deals are dying, right? And now essentially people are focusing more on traditional distribution deals where it's like a 70-30 or 65-30.
Sure.
And now you recoup. Now it's the artist's favorite share. So now you're recouping at a favorable share.
Sure.
So the cost of that capital is still expensive, but it's not, a lot of people
2080.
call those deals predatory, like the traditional label deal.
Yeah. Well, and predatory or not,
Yeah.
I'm still just trying to understand why was that model happening where you have to 5x it instead of just recouping the $100,000 balance?
Because it's just from my POV, it's just it's just the success ratio of the artist, right? Like, in order for a label to recoup, they're going through 20 artists before they even hit it out the park with one, right? So in order to sort of justify that angle, at least for the labels, they needed that sort of risk ratio to justify their wins.
Okay, because of the volume game?
It's a volume game, yeah. It's there's so many risks outside of just creating music. Someone could stop creating music tomorrow. Someone could want to rebrand. Someone could want to, not necessarily, drop a different style of music. These are all things that are outside of the control of the traditional label system.
Got you.